Finance Minister Lim Guan Eng revealed today that the 19.25 billion ringgit shortfall from GST had affected 121,429 companies and individuals. They were not paid back within 2 weeks as required by law, with cases stretching back as far as 2015. According to Lim, only 148.6 million ringgit remains in the GST refunds account as at end May. Lim noted that while the monthly Trust Fund Committee meetings were chaired by former Treasury Secgen Tan Sri Muhammad Irwan Siriga, ex-PM Datuk Sri Najib Razak also played a critical role. Lim asked whether Najib had authorised not refunding businesses, whether he approved Muhammad Irwan's decision to not transfer the full 82.9 billion ringgit requested by Customs, and thirdly, whether Najib had approved for the GST refunds to instead be recognised as government revenue to be used at its discretion. Najib had earlier in the day called for the Public Accounts Committee to investigate the matter, as he believed that the amount is not actually missing. Despite the huge amount of refunds involved, Lim said that the current government has committed to start paying back businesses starting next year. It was a good earnings day for two of the listed arms of the Petronas Group, namely Petronas Gas and Petronas Chemicals. PetGas saw its 2Q FY18 net profit jump 20% to 509.3 million ringgit due to higher revenue and lower tax expenses. Revenue improved 16.2% to 1.36 billion ringgit, and it declared an interim dividend of 16 cents per share. Going forward, PetGas expects its performance to remain stable on the back of its strong and sustainable income streams from its agreements with Petronas. It was an even better 2Q FY18 for PetChem, which saw its net profit increase by 42% to 1.37 billion ringgit. This was as the result of higher earnings, supported by higher interest income and lower tax expenses. Top line came in 19.6% higher to 4.73 billion ringgit. The group declared an interim dividend of 14 cents per share. As for the coming months, PetChem is expecting the olefins and derivatives segment to remain stable, drawing support from healthy downstream demand and firm feedstock prices. Public Bank saw a 4.9% improvement in its net profit for 2Q FY18 to 1.4 billion from 1.33 billion ringgit the year before. The better numbers were due to higher net interest income, higher income from Islamic banking, lower loan impairment allowance, and higher net fee and commission income. Top line also grew by 5% to 5.44 billion ringgit, and the group also declared a first interim dividend of 32 cents per share. Founder and Chairman Tan Sri Dr. Teh Hong Piao said the group was able to sustain good business momentum in the first half of FY18. He said that this continued to place the group in a strong competitive position, with its net return on equity standing at 15%. On its prospects, Teh said that Public Bank would continue to ride on the growing economy to strengthen its banking business along with its organic growth strategy. KLCC Staple Group, comprising KLCC Property and KLCC REIT, saw a marginal 0.7% increase in its second quarter FY18 net profit to 179.15 million ringgit. This was a reflection of Menara ExxonMobil's 100% occupancy since April 2017, as well as higher rental and occupancy rates overall. Quarterly revenue rose 2.2% to 345 million ringgit on the back of more management contracts and stronger revenue from its hotel segment. KLCC Prop also declared a second interim dividend of 2.98 cents per share, while KLCC REIT declared an income distribution of 5.72 cents per share. On its prospects, KLCCP expects its performance to remain stable on the back of long-term lease arrangements anchored by the office segment. It also expects the retail segment to remain resilient, while the hotel segment is expected to benefit from newly refurbished rooms. Finance Minister Lim Guan Eng says the yearly operating expenditure on the East Coast Rail Link would be between a whopping 600 million to 1 billion ringgit if the project is executed. Lim adds that with the country's current debt position in mind, never mind the capital expenditure, the government would barely be able to afford the OPEX. The 81 billion ringgit project, tasked to China Communications Construction Co., is currently suspended and under review. Lim says that the government was forced to issue the suspension order so as to cut costs. To date, project manager Malaysia Rail Link has paid 19.68 billion ringgit, which Lim says is a huge sum. Most recently, Council of Eminent Persons head Tun Daim Zainuddin paid a visit to China. Lim says that although no consensus has been reached on the discussion with China, the gap in the discussion between Daim and Foreign Minister Wang Yi is narrowing.